Every time you open your trading app, something happens before you even see a single stock price. A tiny animation plays, a sound triggers, a color flashes for a fraction of a second. None of that is decoration. It was designed, tested, and optimized, not to help you invest better, but to make you open the app again tomorrow. And the people who built it know exactly which part of your brain they're talking to. Here's the uncomfortable question this video is going to answer. Is your trading app actually a tool for building wealth, or is it a slot machine wearing a suit? By the end of this video, you'll know exactly which design choices are engineered to keep you trading, and you'll never look at that little confetti animation the same way again. Let's start with Marcus. Not the same Marcus from a crisis you might remember. A different investor, same name, same very human tendency to check his phone one more time than he should. Marcus downloaded a trading app 2 years ago because it looked simple. Clean design, bright colors, a green check mark every time he made a trade. What Marcus didn't know is that almost nothing about that interface was arbitrary. The color green after a trade, not random. The subtle vibration when a stock moves, not random. The push notification that says, AAPL is up 3% today. Sent to him specifically because behavioral data shows price movement alerts are one of the most reliable ways to pull a user back into an app. This isn't speculation. Trading apps have faced real regulatory scrutiny over exactly this kind of design. Massachusetts securities regulators and FINRA have both investigated and penalized platforms for using game-like elements, reward animations, streaks, leaderboard-style features that regulators argued could encourage excessive or impulsive trading, particularly among inexperienced investors. The apps didn't hide this. It's in patents. It's in design case studies these companies have published themselves, proud of engagement numbers that would make a mobile game studio jealous. The goal was never framed internally as help users trade less and invest more wisely. The goal was retention, sessions per day, time in app. But here's what makes this more than just an ethics problem. There's a specific psychological mechanism behind why this works on you. And once you see it, you'll start noticing it everywhere, not just in trading apps. It's called a variable reward schedule, and it's the same mechanism behind slot machines. Here's how it works. If a reward comes every single time you do something, your brain gets bored fast. But if a reward comes unpredictably, sometimes big, sometimes small, sometimes nothing at all, your brain releases dopamine not when you get the reward, but in anticipation of maybe getting it. A stock going up 10% feels good. A stock going up 2% still triggers a small hit of that same anticipation. And because you can't predict which trade will be the big win, your brain treats every single check of the app as a tiny gamble worth taking. That's not a metaphor. That's the literal mechanism casinos have used for decades, now running quietly inside a finance app on your phone. Marcus started checking his portfolio during meetings, not because he needed the information, because the app had trained his brain to treat checking as its own small reward, independent of what the market actually did that day. Here's the detail about Marcus that stuck with me. He told me, half joking, half serious, that he missed his kid's school pickup by 4 minutes one afternoon because he was just checking one more chart. 4 minutes. He wasn't managing his portfolio in that moment. He was pulling a lever, waiting to see what lit up. Now, you might be thinking, fine, the app is designed this way, but I'm still the one making the trades. That's true. And that's exactly where the second, sneakier layer of this comes in. It's not just that the app rewards you for opening it. It's that the app makes trading itself feel effortless. And effortless decisions get less scrutiny from your brain than difficult ones. Buying a stock on most of these apps takes 3 taps and about 4 seconds. There's no cooling off period. No confirmation screen that shows you your average trade frequency this month. No friction reminding you that this is a decision with real financial consequences, not a like button. Compare that to the actual paperwork and waiting periods required to, say, take a loan against your retirement account. Society intentionally builds friction into decisions we consider serious. Trading apps intentionally remove it, because friction is the enemy of engagement metrics, and engagement metrics are the entire business model. Marcus eventually noticed his own pattern. He pulled up his trade history and found that his average holding period for a stock had dropped from several months, when he started, to just under 2 weeks. He hadn't gotten smarter or found faster-moving opportunities. He'd been trained, one smooth, frictionless tap at a time, to treat investing like scrolling. Here's what's genuinely uncomfortable about this. None of these design choices are illegal in most cases, and many users report that they enjoy the experience. The apps aren't lying to you about your account balance. They're just choosing, again and again, the version of the interface that keeps you coming back, because that choice was never against their business interest, even when it worked against yours. So let's close the loop. Is your trading app a tool or a slot machine in a suit? Probably both, depending on how you use it. The charts are real, the prices are real, but the interface sitting between you and those numbers was optimized by people whose job was to maximize your engagement, not your returns. Those two goals overlap sometimes. They are not the same goal. What you can actually do about this isn't complicated, even if it's not easy. Turn off non-essential price alerts. Set a fixed day of the week, not whenever you feel like it, to review your portfolio. Notice if checking your app feels more like curiosity about your finances or more like the itch to see if something lit up green. I'll be honest about the limits of this video. I can't tell you which specific features in your specific app are the problem. That changes constantly, and companies update these designs quietly, often in response to exactly this kind of criticism. What I can tell you is that the underlying mechanism, the variable reward loop, isn't going anywhere. It's too effective for it to disappear on its own. If this helped you recognize a pattern in your own trading habits, that's exactly the kind of thing worth subscribing for, because we're going to keep mapping the gap between how these systems are built and how your brain responds to them. And if you've caught yourself checking your portfolio more out of habit than out of need, I'd like to know in the comments. Because that 4-minute story about Marcus and the school pickup? I have a feeling it's not just his story.